Welcome to First Builders, everyone. As you can see, today it's just Amber and me here, and we're going to be chatting through without our typical guest that's on here. But we're going to be chatting through a little bit more about some broad trends that we've been seeing in the past 3 to 6 months. And yeah, excited to kind of dive into a little bit of a different episode for you guys today.
Yeah, absolutely. And if you're not familiar, we're the Council Capital. So we invest all day long in early stage companies, usually their first round of capital right after formation. Sometimes it's just two co-founders and a product. And so we have this sort of unique vantage point talking with all these guests on First Builders, but also investing in all these companies and seeing how they're growing, especially in this moment with AI, hitting every single industry that we invest in. So really excited to dive in. And it was fun for me to even stand back and see what has been happening over the past 3 to 6 months and what observations do we have. So excited to dive in.
Yeah, absolutely. So the first one that I actually have on here is just what I've been hearing evolve around agents versus what's been promised. So I feel like when agents first came out, which is kind of wild, just the beginning of this year, everyone was like, oh my gosh, they're going to take over everything. We're going to have this as the SaaS apocalypse. All the software, stocks came down. But I think in the last probably couple months or so, we've been hearing a lot of enterprise companies just saying this is not what we were promised, in terms of what we're building in-house, because the cost of tokens and running these agents ends up being just even more than an FTE would be. I was talking to someone who said that they were working with an enterprise company that was replacing an FTE for a particular task, and they were running this agent, and in 1 week spent, I think, $100K on the agent, which is way more than what that FTE would have cost
Yeah.
anyways. So
Yeah,
yeah.
that's crazy. And I think there's been a lot of talk about token maxing. That was the thing probably, 3 months ago. And we even hear private conversations happening that maybe aren't seeing the light of day on the news or on X. I sat around a table with a bunch of CFOs of mid-sized to enterprise level companies, and they were all just saying it's right around the corner. People have been saying, CEOs have been driving, let's use as many tokens as possible to show that we're using AI and explore what's possible with AI. And it's going to become headcount planning, where all of a sudden we had, could hire whoever you want. And now it's actually, no, we did a little bit too much. So we're going to have to pare back. So I think it's going to be the same with tokens now, where it's they're no longer going to have these leaderboards where it's whoever spends the most tokens wins this quarter and gets some award, because that can drive really weird, perverse behaviors, and it's super expensive. And Rachel and I have even had a private conversation with one of our angel members who's, VP level at a mid-size interesting company in tech. And they actually had to fire somebody because they used so many tokens that it was detrimental to the entire company. And you're not hearing about those stories in the news. You're hearing people brag about how many tokens they're using, but it can actually
Yeah.
be that detrimental. So we still don't know what this person was doing with all those tokens and what happened, but it was just interesting to hear that actually
Yeah.
happening in practice.
Totally. And I think that just changes, I think, the outlook for companies and startups in the ecosystem too. I know you and I have discussed that we're super bullish still on that application layer, just because especially in the legacy industries and these large enterprises, you're talking to people who have specific outcomes that they're trying to achieve and specific types of workflows. And, they're not going to be building their own agent for every single thing, especially for something that's not core to their business as well.
I mean, SaaS is not dead. We're continuing to see our top vertical AI companies selling into mid-sized companies, enterprise level, Fortune 500 level companies. And it's not just for paid pilots or the first year of service. They are renewing, they are growing contracts. These companies are exceeding every single quarter's targets in terms of new ARR coming in, existing ARR increasing. And these are targets being set by their boards very, very aggressively. So to me, there's a disconnect between what we're hearing, out there that SaaS is dead or vertical AI is dead versus
Yeah.
reality of how these companies are still growing when they're doing a good job in solving a real need. And I think to your point, Rachel, not everybody is a builder and tinkerer. And not everybody, even though it's easier to code products now, you still have to maintain those products after you build them.
Totally.
And, companies want customer support. They want to know that a workflow is designed for them. They don't want to have to be getting into the nitty gritty detail every day or recoding something just because it's not working the way that they want it or they have an evolving need. So I think just being able to pick up the phone or log into a website and say, hey, I can get the help that I need. And they're going to know what they're talking about because they're in it deeper than I am goes a really, really long way. So we're still investing in application layer vertical AI right now, especially in those critical functions like compliance and legal.
Yeah, absolutely. And the other thing that I was thinking about this with the token maxing is that there's probably something that startups can do to make their pricing a little bit more transparent, like either outcomes based or something. I'm not sure what the answer is here, but I do think that there's going to be some startups that are able to win because they're also garnering that trust from a pricing perspective, especially since enterprises want a predictable just price and budget as well.
Yeah, yeah, exactly. And then there's also been this doom and gloom picture that's being painted. Like, not only are we hearing SaaS is dead, which is not true, but we're also hearing AI is going to take over the world and it's just going to be a few companies running the world. Number one, Anthropic. This is a little crude, but I even saw that Naval on a recent podcast said, like, according to the AI labs, the future is only for Anthropic employees and sex workers of Anthropic employees. And I think he was joking, but also we are hearing that kind of stuff from people. And it's indicative of the moment that we're in and the fear that's out there. And I think it's wrong for several different reasons. Number one, that doesn't even take into account all the physical industries like construction, agriculture, manufacturing, healthcare, where AI is a support tool. It's not going to be taking over everything. And then second of all, the average consumer, I wish people would realize, like, when they're reading these headlines, that companies like Anthropic and OpenAI are planning to go public in the next 6 to 12 months. And so they need to have the most grandiose vision possible for investors out there to be able to, raise and go through the IPO on the terms that they want. And so just know that everybody talks their own book to an extent, and some of it's true. So, like, be prepared and use AI tools and think about what new things you can do with those tools, because that will lead to promotion. It will lead to you being able to run businesses in the way that you haven't before. But at the same time, take it as a grain of salt and try to, flip your perspective to be optimistically like, what am I going to do with this new tool versus like, my life is over because this new tool is out there. So I just think there's like a wide disconnect between like the messaging that's out there, the reality that we're seeing, and then like the fear that's in the marketplace because, these companies are incentivized to make statements like that.
Totally. Totally agreed. I mean, I think that, I think that we might have talked about it even on the podcast in previous episodes before, but even going into other cities, I think I was in Atlanta and taking Waymos there, and people there were like, wow, like, I'm not sure about taking this. Like, what was it like? They wanted to just like hear about the experience of taking it, like once I got out of there. And I think that just speaks to like, think about like what's happening kind of beyond even like the Silicon bubble or what you're seeing on Twitter with regards to what AI is or what people are saying about AI. So I think it's really important for like startups to just like take that step back and take that bigger picture as well.
Absolutely. Do you think we're in an AI bubble? And is it going to
I
pop? And how bad is it going to be?
Okay. I think that there is going to be an AI reckoning of some sort. I don't think it's like a complete bubble, but I do think that companies are going to really rethink like how they're leveraging AI, and it's not going to be this like end all be all for everyone. Just again, given the trends that we're seeing and just given the realities, I think of like, how things are going to operate.
I agree with you. I don't necessarily think that we're in a bubble, but I do think, like you said, there's going to be a correction. And I feel like I see that most intensely in the valuations that we're seeing companies raise at
Hmm.
right now. Valuations have been
Yes.
crazy. Even at pre-seed, we're seeing a lot of companies try to raise with, only pilot revenue or no revenue at all, and trying to raise at 20 million to 30 million post money. And this is another thing where like the headlines don't match reality. We're seeing a lot of those companies struggle to find a lead because they're trying to aim so high. And the lead, whether or not that founder's calling it a seed round or a pre-seed round, the lead investors are viewing it as a pre-seed round. And I think the bar is even higher right now for a pre-seed round or seed round to get done because it is so easy to build an MVP product, put it in front of customers, see if it generates revenue, see if you have any product market fit whatsoever before you go out and raise capital. So then when founders come in without those things and they're trying to raise at a valuation that is like 2 or more times higher than it has been in the past for a company at that stage. What we're seeing is like deals just kind of stall at that stage while they're looking for a lead. They may get a lot of interest from angels and smaller firms to participate, But everybody's like, I'm a little nervous to participate until there's a lead that's willing to set those terms. And then leads are not really wanting to set those terms. And I think it does happen for a few companies. Like you could be anointed by
Totally.
Sequoia or, one of these other kingmaker firms because they have to write bigger checks. They have to invest in larger funding rounds in order for their fund to be able to invest because their funds are so big. But for the average VC firm that founders are pitching, that's not an enticing deal for their portfolio construction and doesn't make sense with some of the other deals we're seeing. So that's been also, interesting to think for the ones that are raising as those at those really high valuations with very little traction, what's going to happen in one or two
Yeah.
fundraising rounds where they have to show the data and it's not there.
Totally. I've been thinking about that too, and even chatting with like different founders about this is like, can you actually grow into that valuation? Like, if you realistically think about, your ICP and your ability to catch that market and whatever your distribution edge might look like, making sure like hitting those milestones is actually achievable because, like you said, once they go to that next like one or two funding rounds, they may not be able to live up to that valuation and have to raise either a down round or something else, which wouldn't be great.
Absolutely.
Awesome. Well, speaking of distribution, one of the other trends that I feel like we hear a lot just across kind of our community and across founders is being able to leverage actually community itself as a distribution channel and a unique distribution edge. And maybe we're biased in this because we also leverage that here at the council as well. But we're just hearing this across big companies, small companies in our portfolio, outside our portfolio, that has really become like a unique thing that founders are able to drive for their companies.
So funny. Rachel and I did not talk about our topics before this episode, and that was top of my list too, in terms of what we're seeing across our
So
portfolio,
funny.
in terms of
Yeah.
how companies are winning and the type of companies we want to be investing in for tomorrow. When I hear a founder say, when I ask them how you're going to grow your company, and they say, I'm just going to go to conferences where my customers are at and have a booth there, to me, I'm like, that is
It's not
yes,
interesting.
table stakes, yes, but that is not a creative go to market strategy, and all of your competitors already do that. And
Yeah.
so what I like to see is, we're interested, we're going to be, hosting this series, pulling together our champion users and champion buyers, be able to provide value for them in some way before taking something from them, give them something first, building that community and building brands too around the community and creating a lot of, just brand ambassadors out there from your own customers and the people that you bring into that community. So I know recently we went to GCAI's summit, and it was interesting because you see this user like general counsels, and they just felt so proud to come into a room together and be like, we are leaders in AI. We're coming together around AI. This is our moment to own. And so just like giving a neglected user a space and a community and a
Mhm.
brand to rally around goes a really, really long way. Not just in terms of getting into one door, but in terms of them recommending you to others and everybody feeling like that is a product we need to use because it's built for us. And so we've seen that also in Joyful Health,
For
just bringing
sure.
together community around medical practices and the people that own them and run them so that they can run their back office for those medical practices. So
Yeah.
that's what's interesting to me is like the community led growth.
Totally. Joyful Health is also tapping into just like well-known health care networks and health tech networks. Like they're running education courses with a partner at a Pocket Health for just medical billing. And this is such like an antiquated course. And I remember Eliana talking about this, how, the certifications that you get, like they're like these like 90s style, courses that you're like taking, rarely updated. A lot of what you learn as a medical biller is actually on the job and going through it and the trials and tribulations of actually billing. And they're now delivering it in a way that is much more digestible, much more modern as well. And, actually entertaining and people like taking it. And I think that is also creating an area of trust as well with them. And I think that's huge, especially if you are an early stage startup. Like, why should these bigger companies or users actually trust you? And creating this community, creating this kind of like unique go to market edge through some sort of education can be that value that you were talking about before they're actually asking for or taking something.
Yeah, absolutely.
Yeah, cool. That's what I have right now. Oh, I do have another one actually on here. So I've been thinking a lot about like obviously the healthcare space and some of the things that have been really, really just like resonating and popular this year. I think like there's probably like three main things that I'm seeing. I think there's a lot more interest in anything that has like consumerization or better consumer decisions within healthcare, whether that's on the healthcare delivery side or on like the payer decision side, but just like companies that are able to enable better consumer decisions. So that's one. Another one is there's way more interest in clinical decision support. So actually augmenting doctors with AI. We saw it like earlier in this year, there was a company, Doctronic, that was prescribing, low risk kind of prescription refills in Utah through an AI doctor, essentially. And so just seeing like more and more of these things like come out. And then the third one is just really strong, just I think increase in women's health this year. I think starting from even JPM at the very beginning of the year, there were a lot more designated sessions on women's health that were probably some of the most well attended sessions and things like that. A lot more discussion around it as well, even on the main stage, not just the different side events. So I'm super excited about all of these different trends, and we're seeing that at the earliest stages with the types of companies that are pitching the council as well.
Yeah, I had the women's health one on my list too. This is something we've always cared about. Obviously, we invest in founders of all backgrounds, but Rachel and I both being women and running a community of female angel investors as one of our deal channels, there's a lot of passion around women's health. And so it's always been interesting. But now what we're seeing is like verified data showing that women are top consumers of healthcare, and healthcare is a huge area, huge market for these consumers. And so I had the pleasure of going to the Women in Venture conference hosted by Citizens Bank recently. And there were panelists there in a small room of people, contributing to the conversation. But we had folks in VP level or above at companies like MIDI Health, Function Health, Aura. And it was fascinating to hear how even some of these companies that are, positioned brand wise for the general population, like Function Health and Aura, they are very, very seriously looking at women's health as a way to grow their business to the point where Aura really kind of internally has pivoted toward that as a main focus area. I think, I'm going to quote my memory, but and the exec that I heard in person saying this, but I think women are now 70% of their user base and have a 90% retention rate. And so that's incredible for any product out there. And that's a user base that you need to take really seriously. And I think publicly they've said like two-ish years ago, they said it was like 59%. So almost 60% of their users at that time were women. And I think since focusing more on women, they've seen that even go up dramatically. And now they're, that's a huge contributor to them having grown into an $11 billion valuation. And now there's a rumored IPO. So that's just been really, fascinating to hear, what's happening there, and that this is now becoming something that everybody invests in and everybody should be thinking
Yeah.
about, not just women.
Totally agreed. And it's awesome to see that. And it makes a lot of sense too when you actually take a step back to think about it, like why it would be such a strong retention driver, just given like how there's so many different phases of life that
Yeah.
affect women's health specifically. And so it makes sense. Like you want to wear it, before you get pregnant, when you're pregnant, when you go through like other perimenopause or menopause as well, right? Like you can track all
Yeah.
of that differently versus I think like for men, it's like they don't have the same kind of like cycle
Yeah.
and phases as well. So
Yeah,
it's
exactly. There's
interesting
just a
there.
lot of complexity there, a lot of different like segments of the market to tackle and then grow from there. And I've also loved seeing Brian Johnson, the like
Yes.
top person in longevity. All of a sudden, he's excited about women's health too. And for anybody that doesn't know Brian Johnson, I think everybody does at this point, but anybody who's not on Twitter might not. This is somebody who's put all of their data out there and kind of a human guinea pig trying to live forever. He's got a Netflix special, etc. But recently, he's fallen in love. And he's very, very invested in his partner now living forever as well with him. And so that's been awesome to just get like a new voice in the ecosystem talking up for women's health. Cause I think women have been looking at Brian Johnson for a while saying, hey, that's cool. Where's the female Brian Johnson? We want somebody that we can look up to like that. So I'm really excited to see not only women getting excited about this, but men taking a step and, getting excited about solving some of these problems for us too.
Yeah, no, I'm super excited about like what we're going to continue to see on the healthcare space. Like I feel like technology has always been a lot slower like within that industry, and I think just like the last 2 years have really been an inflection point from like where AI is to like actually drive some of the changes that are super exciting to see now.
Yeah. I was thinking about another thing that I've seen as we're investing in healthcare, especially with you leading the charge in that area, is that there's just this disconnect between established pharma and medicine and then like the emerging technology and the consumer
Mm,
demand for
mhm.
preventative health. So, I mean, and my hot take is I love big pharma. I actually spent my early career at Eli Lilly. It's still to date one of the best places I've ever worked. And I saw a lot of excellence when it came to managing patient safety, employee safety, and then just like operational rigor in manufacturing, which I'm a huge nerd about, but vertical integration, et cetera. They do all of it, better than any company I've ever been on the inside of since. That said, one other thing can be true, which is that I'm really excited to see more power in the hands of consumers. People want to know, they don't want to just go to their annual physical and have a few biomarkers taken and hear they're fine and then later discover they've got like stage 4 stage 5 cancer or something. They want to know, they want more leading indicators up front, and they're saying with all the technology we have today, why can't I get more
Should be
information,
able to.
see more leading indicators? So I'm really excited about things like function health and some of these scans that we've been hearing about for years, but they're starting to get a little bit more affordable for people.
Mhm.
And, sadly, I still think that we're at the point where it's going to be the most wealthy that can take advantage of some of these things. But I think as we see more and more people adopt things like Function Health, paying $365 a year for extra blood tests and then pushing that on their doctor to get more testing done when they need it, or saying, hey, I'll pay out of pocket for an early mammogram or an early heart CT scan. And that data coming out of all of those, users' experiences, I'm excited to see what happens with health insurance long term, seeing some of the impacts of some of those things, because that's going to shift the entire system, hopefully, for as long as health insurance exists and as long as employers are still paying for healthcare. They ultimately don't want to be paying so much for healthcare. And so if we can show that preventative health actually moves the needle and is going to lower cost of healthcare overall for everyone, if we can just deal with things up front, I think that'll be amazing. So I think we're somewhere in the middle of that journey because we still have like butting heads. Like, you hear doctors saying, oh my God, I hate all this preventative
Yeah.
health stuff. Patients are coming to me with paranoia about one little biomarker that they saw off and now they think they have cancer. But at the same time, it's like, well, we do want to see what's going on the inside of our bodies. So,
Totally.
yeah, curious what you're seeing and thinking about all this too.
Yeah, I do think that I've heard like, the doctors that are getting kind of the patients that are more informed, like at least anecdotally, like those doctors are actually happy that the patients are more informed. But it's interesting. I've seen a lot of articles pop up of how patients can actually go to their doctor about having this additional information and the way to word it and like, almost like a like say, being like, hey, I still want you to like tell me what's kind of best here, but here's some information that I found. And there's like just certain ways to word it to like help remove some of the friction in that as well, which is kind of interesting. Like that this is like, I think it was in either the New York Times or Wall Street Journal where there was advice to patients on how they can take their AI results or other like, tech results to doctors to advocate for themselves ultimately. But it's not, it's not new, which is great, but I'm glad that we're seeing more of it. I think historically we're seeing more of these like kind of patient advocates when people were like much more chronically ill, had certain rare diseases, like they really had to take their health into their own hands. And now we're seeing kind of like more mass population around it. I think the biggest thing is now will the health education system be able to evolve to actually train their doctors to think about how they incorporate this kind of interaction as well as AI, in general to
Yeah.
how they practice.
Yeah. The investor in me hearing you say that is like, what a time to be alive. This is so exciting because there's so many problems to be solved. I mean, you have this new
Totally.
technology and, that longevity mixed with preventative care, mixed with AI. It's going to disrupt everything. And that's going to create all these ripple effects. Like you said, I wasn't even thinking about the education piece. So that's exciting.
Yeah. Lots of
Yeah.
lots of exciting things, I think.
Yeah. And then on the industrial side of our investing, which I spend a lot of time in, this is the time for vertically integrated manufacturing and the industrial titans of tomorrow. I really think that we're going to see like the Vanderbilts of tomorrow, building companies right now that are going to be lasting for decades. So, just for context, I spent the first half of my career in hardware and manufacturing. So I've seen, operations like chrome plating, die casting, plastic injection molding, circuit board, surface mount technology, final assembly, test, and packaging. So everything from tiny little parts being made to huge assemblies coming together and being packaged and sent off to consumers. And been on the floor of manufacturers like Foxconn, Pegatron, Sanmina, and Flextronics in Asia. And separately as a consumer, I've seen huge successes in companies like Oura Ring and iPhone, but often those eclipse all the failures that have happened within consumer electronics, consumer products, hardware, and not only that, but the manufacturers that support them and some of these physical industries that support them. And I think the takeaway for me, having spent so many years in hardware, was that hardware was too hard. It was so expensive to get a hardware product off the ground, and it still is today. But another takeaway for me was that running factories could be great for like a PE roll-up strategy, but terrible for early stage venture if you wanted top decile performance. And that was largely because, you need so much capital to launch something like a manufacturing factory. And same thing, if you're doing this in agriculture, it takes a lot of money to build a bunch of farms and a bunch of robotics to be generating plants. And same thing in construction. You can get these businesses off the ground and they can be great, but are they going to grow by 200x, after your dilution, or even 100x after all of your dilution of your initial investment? Because what happens with these companies is they would raise one round of capital, and 6 to 12 months later, they're like, we're growing, and so we're going to need more capital to keep growing because we need more equipment, more
Totally.
space, more people. And so the operating expenses and the upfront capital asset expenses are just so huge over time. And I think some of that is still true today, but I really think this is the time where we're seeing the shift in operating expenses, or OpEx, going down. We're still going to need a lot of equipment and a lot of space to launch businesses like this, but you can do more with less. And that may mean less employees, but on a whole, across the United States, it's actually going to be more employees in manufacturing and agriculture and construction, because these are the industries we need, and we need so much more capacity than we do today. We can bolster those things with AI and robotics so that you're not strapped down by so much expense to get these companies off the ground that it doesn't even make sense for our asset class. So I'm super excited because I get to be a geek in my early career area and be investing in venture scale businesses in this space. And that said, I'm going in eyes wide open. Not every company that is branding themselves as a venture scale company in manufacturing and agriculture and construction is actually going to be venture scale. But I think the first one where we actually took this risk at the council fund was Knox Metals. We've been investing in software for industrial sectors for 6 years and 4 years with our first venture fund. And now that we're investing out of fund 2, and all of this is happening with AI and robotics, it was hey, maybe we should take a second look at not only the software that's adjacent to these industries and supporting them, but the industries themselves. And so Knox Metals was kind of the first deal where I felt like now is the time. This is the company and the point in the supply chain where something venture scale makes sense. And this is the founder to do it. We found a first builder founder. Zane had, background in tool and die industry growing up, background at Uber, just, a short stint there, but saw what it was like on the inside of a tech company, also spent some time in PE. So he definitely was thinking big and wanting to build something venture scale, which is very important. So that's something I'm really excited about. You're seeing companies like Send getting, billion-dollar valuations or above. And, we've seen this with Hadrian as well, doing it for CNC. So I'm just excited for more of that. And in our industry, and our job as venture capitalists is to look past the noise and everybody trying to do all the same thing, and past the sort of bandwagon fans, and try to find the real founders that want to build something venture scale in an area that makes sense and a point of the supply chain that makes sense.
Yeah. And then how do you think about that? Especially when you went to reindustrialization, I feel like this year it got way more news, and even on Twitter, more than it usually did.
Yeah.
So I'm curious, how it felt for you when you were there. I know you were mostly visiting Knox Metals, but yeah, I don't know if you saw
Yeah.
anything while you're walking around there too.
Yeah. So I didn't go to the conference, but I was in Detroit, and I had a bunch of friends at the conference, and that even, were affiliated with running the conference. And what I saw just leading up to it is, so many folks that I know in venture that historically haven't invested in this space were like, I have to drop everything and go to reindustrialize in
Oh, wow.
Detroit, which was really cool to see. And honestly,
That's super cool.
we've seen VC firms that we've collaborated with on some of our vertical AI application layer deals now jump in and get in this latest round on Knox Metals. And I just felt so happy and inspired to see that. You can debate all day, is this going to be a trend that's going to last forever? Or are they just kind of jumping on board for now, but I think it's great for the industry and hard tech that you're getting interest from generalist investors because they have the capital connections to scale. And so I think it's only net positive for everyone. The other thing I saw was just like a confluence of really exciting events, not only within our portfolio, but within the broader ecosystem as that event was happening. So I know Atomic Industries was like opening up their first factory in Detroit. That week,
Cool.
I think they were doing like the ribbon cutting. Knox Metals, they they shared the news of their latest like wildly oversubscribed seed round the day before Industrialized was starting, and their factory is literally in Detroit. So a lot of people are kind of coming by. I joked with Zane, the founder of Knox. He said this is like the most distracted his employees have ever been, just because so many people wanted to come and see Knox Metals, myself included. And so that was really cool. And then you had the Send Cut Send news about Sequoia's recent investment and just, the fact that you can have multi-billion-dollar companies, growing and exiting in this space. And so just a lot of support from, emerging and established founders and showing that we can actually have these huge successes in this industry. So I think that was the excitement, and everybody was just excited to be there together, feel the moment together. And like I said, I wasn't in the room because I was just nearby. And I had a lot that I wanted to do at Knox while I was there and then get back to San Francisco. But it was just a really cool moment for the industry.
Yeah, that's really cool. And what you said about like even just having the generalists getting interested in the sector, it reminds me of just like I feel like in healthcare, oftentimes people will, recommend for startups to have like that mix of the generalist investors as well as like the healthcare specialist investors as well, because then you get like really great advice from kind of like all sorts or all types into your, into your board and just on your cap table. And so I can imagine the same can be really true here as well for like some of these industrial type of companies.
Yeah. I should also mention while I was out there, I had no intention of like recording content for social media while I was out there, but I went to Knox's factory and I took a few videos while Zane was giving us a tour. And then later I was like, hey, I should just like create a little reel and see what happens. Maybe people will like this. And I have never seen such excitement and I look at that, like if you post something on TikTok and Instagram, you're really seeing what do like general Americans think of this company and this product and this industry versus what do VCs and like tech people and founders think, which you would see on Twitter. So that was fascinating. Like when I posted on Twitter, I got like, hundreds of likes and a lot of comments and support. But when I posted on Instagram, it was like, I think now it's like 110,000 views, thousands of comments, ton of people DMing me, and most of it positive. There were like a couple of naysayers, but like 99.9% people were so excited about a company that could be venture scale. It's creating jobs in America. It's solving for our like, capacity issues that we have in this
Mhm.
country.
Yeah.
We don't have to outsource so much if we can do it ourselves. We can create a new whole class of jobs for young people coming out of university or choosing not to go to university. So it's just really like cool to see that support
Yeah.
from people outside of our VC industry as well.
Totally. And, I know you mentioned like there was like some naysayers, but anything that goes viral, you don't like that's like the best
Got to get
thing to
those
have.
haters. Yeah.
Exactly.
Yeah.
Yeah. I mean, otherwise, if you're just like going on something that's like everyone loves, then it's not that exciting, probably. But if you
Yeah.
find something that like there is a little bit of like
Yeah.
controversy around it, I think it's like a much more exciting type of deal and probably like hits a little bit more deeper as well.
Yeah, yeah. I feel so lucky that I've had some friends, or I do have friends that have built huge like creator brands before, and all of them have historically said you need those haters to go viral. So when I see it happening, I'm just like, thank you, haters. I was prepped for this. Whereas I'm sure the first, general person, if you went viral and had like one person say something
Sure.
negative, you're like thinking about it for 3 days straight. Like
Of
I actually
course.
had somebody text me and be like, we wanted, like, our team was wanting to check in with you to see if you were okay. And I'm like, I'm fine. Like, I am happy. This is exciting. And like, literally, it was probably 99.99% positive. Like, if you
Yeah.
look at the amount of engagement, and people were even like emailing me, like, oh my God, congrats. This is so exciting. So that was awesome to see. But
No,
yeah.
that's really cool. Yeah, I'm excited about this, and it's like, in an area that I don't know very well because I haven't worked in it, but it's been really great to like kind of learn alongside you and like with the council as well. So,
Yeah, likewise. And it's been awesome just seeing you dive into healthcare. And, for those that don't know, the council has historically always invested in healthcare, but it's the area where I had the least expertise. So bringing Rachel on as a partner to really come in and bring, her expert knowledge, having coming from Komodo Health and Science Exchange and early career in life sciences has just been huge in terms of our ability to, talk to all the interesting founders that come our way in healthcare and whittle down to the ones where we really think that it makes sense for our portfolio. So, and I'm learning a lot by working with you too in these areas. So thanks for that.
Yeah, no, I'm excited. There's like a lot of exciting deals that we can't share yet, but
Yeah,
they're in the pipeline. So hopefully at some point in the future we'll have them as guests on the podcast as well.
absolutely.
Awesome. I think those are all the major topics that I had. Are there any additional ones that you wanted to
I
chat through?
I think I got all of mine. So that's it for me.
Nice. Okay, this is great. This is
Yeah.
our most unscripted episode that we've ever done.
Yes.
So I feel like, it was a good first take.
Yeah. Love it.
Awesome. All right. Well, thanks everyone. Appreciate you all listening and please do subscribe and share with a friend. We're always really happy to get any reviews that you have as well.
Yep. Absolutely.
All
Thanks,
right.
everyone.
Thanks everyone. Bye.